Hey, what's up everyone? Aubrey Trades here, and today I want to talk about the EMA Cloud system you keep seeing on my charts. Before we get into that though, gotta give credit where credit is due. So, if you haven't heard of Ripster 47, I highly recommend you give him a follow. Not only is he the creator of the EMA Cloud system, but he's also the founder of AtlasTrading.net, and every day posts dozens of trading gems covering position sizing, risk reward, psychology, book recommendations, options trading ideas, or just his own trade ideas he'll post. I mean, now, again, with anything, don't just follow blindly, but just something to keep in mind, check it out. I've definitely learned a lot from his timeline myself, so can't recommend it enough. Getting into the charts, up I have ISPC from our weekly recap, and before we really get into how I'm using this, let's just get into what each one is, all right? It's an exponential moving average based system, so you don't necessarily need the cloud per se. You could just use regular EMAs. I happen to like it because it is visually a little bit more pleasing as opposed to just having a bunch of lines on my charts. I will have a ThinkScript link to this in the description below for you to download, try it out, play around with if you want. First cloud is going to be the 513 EMA cloud. Here's how it looks. You can change these settings, 513, change the moving average type. You can have it so it plots upward cross signals, downward cross signals. You can change the colors, all that stuff. Second cloud is the 3550. This is arguably the most important one, as it defines the overall direction of the trend. I have mine set so that the uptrends are green, the downtrends are yellow. And this is the one where I have my signals laid out. I don't have them on any of the other ones, but I do have it on this one. Don't live and die by the signals. Sometimes it gives false signals, especially if it's in consolidation, but it is good. It just gives me a nice, easy visual to see when the cross happens, right? Here's the signal, here's the cross. Beneath that is our 7289 moving average cloud, which is usually where you see some hesitation. Once it breaks underneath, you typically might see a little bit of a bounce off of this. Not necessarily looking for long ideas based off of this, but just something that I like to keep in mind, have on my chart. And then the final one is our 180-200 EMA cloud. This functions as, our overall, it's sort of like seeing the 200 SMA on a daily chart, right? And this is kind of like, okay, end all be all, right? How do I use this? Well, if I'm looking to go long, I want to go long stocks that are in a strong uptrend, and I'm specifically looking to get my entries pretty close to this 3550, if possible, right? I ideally am incorporating this with other, into other strategies. If you're playing breakouts, if you're playing all-day faders, trend breaks is one that you've heard me talk about a lot. It's my favorite. So if I incorporate this into a trend break, right, I have a little bit of extra conviction knowing that we're in the strong uptrend, we're holding this 3550, trend break happens, you grab this confirmation dip, and then once you're in the trade, you're riding the 513, okay? So you take this, you ride the 513, you know the trend is starting to die once you cross into the cloud range. Once you get the second candle confirm, take your exit. So you miss the top, you don't catch the top, but in this example, you catch 1780s, 1790s up into the 2160s, 2150s or whatever, right? So gets you the meat of the move. We can see a bunch of examples of this. I'll give you an alternate example when you get the downward cross. So here, right, we had this massive gap up, immediately out the open, immediately out the open, it fails the 3550. So that gives you your first indication that, okay, trend change, right? Now it completely breaks through the 7289, but it does catch a bounce, and that serves now as resistance. Boom, boom, boom. Where do you see your bounce? 189, 200 EMA. If you're looking to get short, you know, here's your formal cross point. You can short into this resistance now. Cover, short, cover. You can see it. Let's go through different examples. Like let's take BFRI. Here's another one. We got 10-minute candles. Spikes on Friday after COVID fears. Here's your signal cross. Here's one where it doesn't even get close to the 35.50, right? So if you're combining this with, let's say, a trend break setup, you know, you wait. Here you have this fail, boom, boom. You now see this trend line set up on the 10-minute chart, boom. You're hovering around VWAP. You take your entry. You know that you're now going to risk a cross underneath the 513, and then you can ride it up, right? So again, used in tandem with other strategies, not end all be all by itself. If you're buying into these dips, right? If you want to play just on the 513, well then you got to set your stop at a cross underneath the cloud. All right. So it's just a tool to help you illustrate what the trend is, and you can create your trading system around that. Other examples, let's even look at how look at the volatility index, right? This is one I've been using like to play SPY weekly calls, because the VIX I find reacts really well to technical levels. Like here this week, right? You had 2021 as a technical level from even back in, go to the 1 hour chart, like from back in here, right? Boom, boom, boom. So on this 10-minute chart, you see, look at this. You're in uptrend, you fail this technical level, you watch. It catches a bounce, boom. Where does it kind of like hesitate on? 35.50, breaks, right? Or even like over here, fails, bounces off 35.50, puts up a lower high, back down, hesitates on the 72.89, hesitates on the 200, back up, retest. And then here you have your crosses, right? Again, false signals because consolidation. If you see this, I mean, you can see this in the SPY too, a lot, right? Especially since we've been chopping around in the SPY. Look at all these false signals. If you're getting a lot of these, I would suggest make your time frame a little higher. Go to a 1 hour chart, right? Gives you a better sense. But here you're still getting a little bit of false signals, in which case you can use your 4 hour chart. Always important to cross-reference and look at these high time frames. We just got a down signal on the 4 hour chart, which tells me bearish for the SPY. In the day chart though, we still have the uptrend holding, and we're gonna look for a hesitation for a bounce off that 456 range, right? So this is just a way to help illustrate what the trends are, and then you can base a trading plan around it. Do not use it as an end all. It is just a tool to illustrate and help you see what the trend is. If I'm in a bearish trend, I'm not looking to long this, right? If I'm in a bearish trend, I'm looking to short into the resistance. I'm looking, if it's the SPY, I'm looking to buy puts into this resistance, right? Or if I'm in an uptrend and we're here, I'm looking to buy long calls on this support hold for the bounce up. Just an example, right? ISPC, again, trend break, 35.50 hold, catch the move up. But it's just a way to help you see where your like support and resistance is going to be, helps you illustrate what the trend is. You can even see this, look at this uptrend here on these three. So if you combined it with support and resistance, you combine it with your trend lines, it can make for a pretty good system. So that's how I use it. If you got value out of this video, please hit the like button. If you got questions, leave it in the comments below. I'll do my best to answer. If not, make a follow-up video if there's enough interest. Let me know what other types of content you want to see from this channel. And consider subscribing. I'm Aubrey Trades. Thanks so much for watching. I'll see you in the next video.